A question. At the point when you are registering your company, were you asked what nominal share capital would you want us to put for you? And maybe that question caught you off guard and you asked the person who was assisting you. This could have been a lawyer, a company secretary, or sometimes an accountant. And you asked them, what does that mean? And they told you, this is the amount or the figure that will be indicating the financial strength, the financial muscle of your company. And all of a sudden, you are very delighted and you asked, what is the maximum that you can put? And this guy told you, okay, we can put for 100 million. And you said, that's good. Proceed. And that person, that lawyer, accountant, or company secretary proceeded to prepare and register a company for you with a nominal share capital of 100 million. Not a problem, quite okay. In fact, I'm talking about myself. In 2016, when I registered my first company, the person who registered for me, I could be knowledgeable about share capital and matters about companies, but that's not where I started. Remember, every master you see was once a disaster. And for sure, in 2016, I was not as good. So I went to a guy, an accountant, and I told him that I need to register a company. He said, I will register a company for you with how many shares? 1 million shares. And the value of one share, I will give it as 100 shillings. So total value of that company is 100 million Kenya shillings. I was very happy. And at the face value, I thought everything was okay. Because if I want to pitch to a bank and I produce the CR12 on the table, they see this company has nominal share capital of 100 million. Suppliers, or even suppliers who are supplying me with the raw materials or with stock, assuming I am a hardware, they cannot supply to someone on credit whom they think is not financially stable. And for me, the CR12 I would speak volumes in terms of my financial capacity. The banks, you would think the moment you place the CR12 on the table, banks would open doors for you. And this is not my thinking by then, but what most people think. And I've realized it is a misconception even as people, even up today, the people who are in the auditing, accounting profession, they still think that the amount of money appearing or the figure appearing on the CR12 as the nominal share capital is what the company actually is invested with. So I've seen some cases, an auditor wants to check your books of account. You have asked someone to prepare for you the books of account and they ask you, could kindly furnish us with a CR12. And the main reason they are asking for the CR12 because this is the document that is generated from eCitizen and it indicates who are the owners, what are their shareholdings, what is the registered office of the company, what are the objectives of this company, who are the directors. So the guy, this auditor asks you for a CR12 and you provide. But among other things, what he needs to check from that CR12 is the nominal share capital so that he can use that figure when preparing the financial statements and more so the balance sheet, the statement of financial position, the equity section, where we say this company has this number of assets and this number of assets have been, this value of assets have been financed either by equity or by debt. So for the equity side, they want to solely rely on the figure they are reading, they are seeing from the CR12. That's wrong. If you're an accountant, if you're an auditor, if you're a director, if you're a shareholder, investor, supplier, and you rely on that figure, including bankers, it is wrong. That figure just shows the capacity, the potential. Think of, you come to my place and you find I have a 10,000 liter tank. outside my premises. Don't rush to think that because this tank has the capacity to hold 10,000 liters of water, that in fact there is water inside. Now, that size, that tank is equivalent to the nominal share capital. It's just showing the capacity. But what matters the most is the paid up share capital. The paid up share capital. That I'm saying that I have this water tank with the capacity of 10,000 liters. But inside, what I've put there is only 1,000 liters. 1,000 liters. Now, that 1,000 liters is what comprises the paid up share capital. This paid up share capital is the amount that I have actually invested in my company. This is the amount that has helped me buy my first computer for the company, the furniture, to pay rent, to buy the stock. This, if it's 1,000 or 100,000, that is the amount I'm talking about. Leave alone the 100 million that is appearing on the CRA 12. So when we come to preparing the financial statements and most of the balance sheet under the equity section financed by, we will use the paid up capital. Because this paid up capital, I can be able to support it. I can say, yes, I raised 100,000, I spent about 50,000 to buy furniture, to buy computer, to buy all the items that I needed, and what is remaining is this 50,000. And I can demonstrate, maybe it is somewhere in the bank account for my company. The 100,000, the balance is there. But 100 million that is appearing on CRA 12, I've never touched such a colossal amount of money. Now, but I see most auditors, most accountants struggling to explain that figure appearing on the CRA 12 on why they need to fit it in the financial statements. And at the end of the day, they have financial statements that are misrepresented, financial statements that are inaccurate, that are incorrect, and that normally finds and forms a basis for KRA to come for you. You can imagine my company, the CRA 12 indicates 100 million, and it is the one that by mistake or some guy, some accountant decided to place on the financial statement, on the balance sheet. Then KRA is wondering, if your equity, you contributed 100 million to this company, then these assets, where are these assets? Because this person must have tried to cook books to balance this equity with the value of assets. Where are these assets? When did you procure them? And in fact, where did you get this 100 million? Did you procure a loan facility? Then, if you are able to source this 100 million that you have indicated in your books of accounts, it means you have other sources of income that you have not been disclosing to us. Maybe the income taxes that you pay should be more. There are some business that you are doing undercover. Now, when you find yourself being targeted by KRA because of some stupid, unnecessary reasons, don't blame anyone else. Blame yourself. So from today, please understand the difference between nominal share capital and paid up share capital. Paid up share capital is the amount of money that you are using to run your business, that you have invested in your business. Is the amount of water that you have poured in that 10,000 liter tank. The 10,000 liter tank just shows the ability, the capacity. So you keep more water into that tank. Similarly, you keep investing in this company, because the registered is, for instance, my company that I'm talking about, 100 million. But I don't need 100 million from the word go. And it was a good idea, maybe. This guy was, the person who registered the company for me was visionary and meant well for me, because it is a vision where I need to go probably in 10 years, 15 years, whatever it is. But so when I'm starting the company, you don't need the 100 million. Maybe you need 100,000 to buy furniture, to buy computers, electronics, pay rent. Then you start operations. when the business grows, you increase the paid up capital from 100,000 to 1 million. So probably you want to hire more employees, to buy more assets, to buy more stock. When it continues to enlarge, you increase the paid up capital to 10 million. By the time you are getting to 100 million and you still need to enlarge your company, then at that point, you need to apply to the Registrar of Companies through the eCitizen platform for them to increase your nominal share capital from 100 million Kenya shillings to maybe 200 million Kenya shillings. But there is no single point that the paid up share capital should exceed or be more than the nominal share capital. Don't tell me that you have the capacity of 10,000 liter tank and you want to tell me that you have water to the capacity of 15,000 liters. It is not possible for this 10,000 liter tank to accommodate 15,000 liters of water. But unfortunately, this is the typical case with most companies. This including most likely your company. And I want to challenge you. Generate your CR12, because most companies, they have the share capital of 100,000. You see 100,000 that the person who was registering the company for them, for you, indicated that you have 1,000 shares. Your company is supposed to have 1,000 shares and each share is worth 100 shillings. So total value 100,000. But your company owns a car, your company is a hardware, you run a hardware business, it has so much assets there. Maybe it is a supermarket, maybe it is a petrol station, maybe it is a consulting firm, but the CR12 is indicating that your nominal share capital is 100,000. Doesn't make sense, because you are saying the full potential, the maximum this company can be able to raise in terms of finances is 100,000. But in the real sense, you have more assets, you have invested more than that. So you need to correct that. Ensure that the CR12, the figure appearing on the CR12 matches with the amount of money you have invested in that company. Don't invest 10 million, but your CR12 is indicating 100,000. You're telling us, at my place at home, I have this volume of water, 15,000 liters of water, but the tanks that we can see are only for 10,000 liters. Doing so, when the paid up share capital is more than the nominal share capital, that is a violation of the law. The Companies Act requires that every other time your paid up share capital wants to increase beyond the nominal share capital, you should apply to the Registrar of Companies for them to increase that capacity so that you can be able to contribute more. Remember, for many years, that's the story we used to have with our good country, Kenya. That every other time our MPs wanted to borrow in Parliament, they would increase the borrowing limit. It started from 5 trillion, 7 trillion. By the time Uhuru was leaving, it was 10 trillion, now 11 trillion. But it got to a point that we stagnated it at 12 trillion, though we changed the way we value our debts. But now, the point I want to raise is that time when we are using that metric, we could not borrow over above what the debt ceiling, the borrowing limit that was provided by the Parliament. Every other time the CS for finance would want to borrow more, he would go to the Parliament and request them to increase the borrowing limit, maybe from 5 trillion to 7 trillion or from 7 trillion to 10 trillion, so that they could borrow. So any time you have ever heard about Maina Wanjigi talking about odious debt, these are debts that were borrowed over and above the debt ceiling. You should not borrow. Even for companies, under the Articles of Association, it tells you how much a company can borrow. If as a financial lender, as a financial institution, you lend more to a company than what the Articles of Association say about the borrowing limit, then anything that you have lent to that company over and above what the company has the capacity to borrow that is not money that you can demand from the company. You can maybe perhaps demand it from the directors of those company personally at the individual capacity. But that is not a debt for the company. That is what is referred as odious debt. But in conclusion, let's understand the difference between nominal share capital and paid up share capital. Nominal share capital appears on the CRA 12, but by the virtue that it appears on the CRA 12 means this is money that is available for the company to run its operations. On the other hand, the paid up share capital is the amount that have actually been paid, contributed, injected into the operations of this company. And these are monies that appears. This is a figure that appears on the financial statements, in the balance sheet, under the finance by section, the assets. And it also appears in the register of members of that company. That company, apart from CRA 12, leave it alone. There's another document called Register of Members document. It shows the number of members that are in that company, when they joined, how much they have invested, the number of shares that they have, and that's where you will get the paid up share capital. If you are an auditor, an accountant, and you want to really get to get that figure for purposes of using and including it in your financial statements, that's where you get that figure. Stop referring to the CRA 12 share capital figure. That's only a legal figure, a theoretical figure. It shows the ability, the potential, but it does not reflect the reality vyenye mambo iko kwa ground.